What's your call for emerging markets for next year?
Hey, Paul, thanks for having me, and thanks again, Matt. So 2022 is going to be an interesting year. If you just look at the backdrop of what we've been through over the past 12 months, obviously it becomes a little frustrating at times. But again, our firm is solely focused on fundamentals. We're very bottoms up. We focus on high quality businesses trading at attractive prices that pay some sort of income or dividend distribution. And more importantly, is we want those characteristics to persist. So when we look at the macro point of view, yes, sometimes it looks a bit gloomy, but we have to remember emerging markets, volatility is inherent, right? We have 26 different countries. When you think about last year's best performer, South Korea was #1. It put up almost 40%. Year to date, it's almost down 9%, right? And same goes for China and a few other countries. But when we think about what could unravel, valuations are extremely depressed, not only on an absolute basis, but also relative across various indicators. A quick one is the Shiller price to earnings ratio, which essentially levels the playing field between countries such as the United States and emerging markets because it adjusts for cyclicality and inflation. And right now, the discount is at all-time highs. Now, is that the only thing that will unlock value? We personally don't think so. It's a confluence of events. And I think one component that seems to get overlooked is the portion of narrative economics that we've been seeing over the past 12 months. When, we latch onto a story, be it for good or bad purposes, and then it perpetuates itself. Because if you look at the underlying fundamentals of a lot of these businesses, especially the ones that we invest in, they continue to persist, they continue to beat on earnings and have high quality type earnings. And so it's very, healthy financial statements. So I think as a whole, diversification is key. It's hard to actually tell when that value will begin to unlock, but I think once momentum starts to carry itself and there's relative outperformance, I think it will continue.
What is it that if I look at my comp screen on the Bloomberg terminal and I put in, big developed markets like the S&P versus iShares MSCI Emerging Markets ETF or the MSCI Emerging Markets ETF, emerging markets did keep up if I look over the last 2 years into December, January, February, March, and then started to underperform. What happened? What changed?
So China was a component of that. And again, China today drives a majority of the returns for the index. When you think about what it is today, it's roughly a third. But if you go back to when the index was created back in 2001, it was less than 5%. I wouldn't call it a rounding error, but it was a lot more minimal. So today, a lot of what drives returns in China will obviously create some skew to the index. That, I think, coupled with a few news sources, I know that there was a lady that just discussed vaccinations. There was a lack of vaccinations across multiple markets, including India. That started to pick up. I'm originally from Mexico. I can tell you that it started to pick up recently, but for a while, it was pretty flatlined. But again, removing the noise specifically, looking at the fundamentals, it's a little head scratching sometimes because, again, there's just so much divergence between not only the U.S. and emerging markets, but emerging markets just to broad developed indices across the globe.
So, Luis, when you and your team are looking for opportunities, do you start at the country level? I want to be in Brazil. I don't want to be in China. I want to be in South Korea. Or do you look for individual companies first?
So our philosophy is based on academic research, and we've looked at history, and what's rewarded emerging markets specifically is not taking big specific or sector or country bets. We focus more on the individual company level. So think about it this way. We isolate the risk to the country level. So if China's 33% right now, we'll be plus or minus a few percentage points, but it's more of a function of finding high quality businesses that we can, again, put within that bucket. But for us, it's not a specific view on a country or sector because, again, going back to my first comment, there's just so much inherent volatility year to year. Picking which will be the specific winner out of 26 countries, just based on raw statistics, is very difficult, right? So diversifying from that point of view and then just buying high quality businesses at attractive prices that pay dividend will have a higher probability to succeed in our view.
And that's a key part of your strategy as well, right? I mean, not to belabor my love of the comp screen, but it shows you absolute price change, and it also shows you total return and the difference. Somebody on Twitter yesterday was saying, thanks for including total return. A lot of people leave dividends out. This is a big part of your strategy, isn't it?
Yes, that's correct. And if you think about the makeup of emerging markets, Ironically, over 85% of public companies within those 26 countries pay some sort of cash distribution. In the United States, it's less than half. So when you have a sandbox that lends itself to this type of strategy at an individual company level, not only does that help increase total return for our strategy, it lowers risk, and it actually lessens the probability of financial misrepresentations.
Luis, give us an example in 30 seconds of maybe a recent company you added to your portfolio.
So I can't necessarily speak to a specific company, but sectors and countries, there's a company within Poland. It's a software as a service that's a mid-cap company that's done quite well. It's piggybacking on what we're seeing here in the United States in terms of Amazon locker delivery locations, safe drop-off locations. So it's kind of a combination of hardware and software. But again, looking at their return on equity, return on invested capital, they're growing leaps and bounds. And again, they have a high market share within their country. And nobody thinks of a country such as Poland, right, as an emerging market country. But again, there's value where we believe is in specific countries like that. And again, we've been very lucky to find that opportunity and hope that will persist.